Okay, the question that everybody asks, if they have a foreign bank account, why do I even need to disclose it? Well, the reason why you need to disclose is because there's a law that was passed in 2010. The law is called FATCA. That's the acronym for this law. It's called the Foreign Account Tax Compliance Act. And what FATCA does, it basically imposes a level of transparency on foreign banks and foreign financial institutions. And what it requires is that the foreign financial institutions disclose to the Internal Revenue Service information about U.S. account holders. So if you have an account at a foreign bank, the foreign bank or the foreign financial institution, let's say it's a brokerage, let's say it's an insurance company, they are required to provide information to the IRS about you. It gets a little bit more interesting. If they don't provide that information to the IRS and they actually send money your way, that foreign financial institution becomes liable. And they will become liable with a penalty. And the penalty is called a backup withholding. And that's a 30% backup withholding. So let's say, for example, a foreign financial institution has $1 billion worth of pass-through payments that go to U.S. persons, okay? 30% of that could be $300 million in backup withholding that that financial institution could be exposed to in liability. So it really falls upon the financial institution to provide information to the IRS. There's also things called intergovernmental agreements. Now, what an intergovernmental agreement is, an agreement that countries have made with the U.S. government. And we're seeing intergovernmental agreements come into place in many different places that I never thought you'd ever see intergovernmental agreements come into play. One of the intergovernmental agreements that came into play this summer, in substance, was in China. So now the Chinese are climbing on board with FATCA. Hong Kong, Singapore, a lot of the Asian governments, Russia, a lot of different places that you would never expect have gotten on board with transparency and providing transparency, have climbed on board to this FATCA law. Why would a government want to do this? That's what I always would ask. And the answer to that question has become kind of clear. They want to know information about their own citizens as well. A lot of these agreements are reciprocal type of agreements. And what FATCA has done is allowed foreign governments to get information about their own people. So China, for example, can find information about the Chinese people that are living in the United States that have accounts in the United States under its agreement. And it's allowing a financial transparency to exist. International tax is sort of like a tug of war, okay, over tax dollars. So, for example, if you're France and your citizens, your high net worth individual citizens, have their money hidden in Switzerland, for example, or Monaco, and they're not paying tax in France, it would make sense to bring that money back to France. And so that's why France and the UK have also implemented laws that are similar to FATCA and put those laws in place. And they actually have their own voluntary disclosure programs now to get people to regularize, that's what they call it in France, their accounts and disclose their accounts of French citizens in France. So other countries are climbing on board. We're not the only ones that are doing this. And for the naysayers, and there are plenty out there that say FATCA is ruining the United States, I have my own opinions about it, but I don't think it's going away. And I think other countries are really starting to climb on board. And really all FATCA is an extension of the Bank Secrecy Act and the laws that are being imposed on us right now through the Bank Secrecy Act, and we're starting to impose them on other countries, and there's a penalty that's associated with it. So I want to talk about our legal history in the Bank Secrecy Act.